Good morning, everyone. Thank goodness it's Friday, May 15th, 2026. I turned on my screen this morning and I saw that the rally is starting to fade. The headline is reality starts to come into the market. Stocks trade lower. The drugs are wearing off. Euphoria fades as market faces facts. Investors come down from months of AI mania, rate denial, and liquidity fever. The hangover has begun. Narrative high no longer working. From AI miracles to soft landing fantasies, investors are waking up to higher rates, slower growth, and geopolitical chaos. It looks like the hopium is starting to not have the same effect as it once did. Tech leads the decline. Investor sentiment is souring. Earnings data reality. Actual numbers beat narratives every single time again. The truth is starting to reveal itself. I pulled a couple articles from Zero Hedge. The headline here is the first real crack in the AI melt up. And this is a premium article, so I can't view it at the moment, but we basically get the idea that there are problems underneath the surface, but the market has been ignoring every single problem all the way up. This one's interesting. Trump talk and Thucydides Trap threat triggers market mayhem overnight. So what actually happened here? So at dinner, President Xi made a reference to the Thucydides Trap. The core theme is that markets suddenly realize that the US-China relationship may be entering a much more dangerous phase. Xi invoking the Thucydides trap shocked markets because it is essentially a warning about a great power conflict. It's China versus the United States. The phrase carries heavy historical implications. Athens versus Sparta, rising empires often end in war. I had Gemini pull the description of the Thucydides trap just in case you guys don't know. The Thucydides trap is a psychological and political concept used to describe the inherent friction and high probability of war when a rising power threatens to displace an existing ruling power. It's the geopolitical version of this town ain't big enough for the two of us. Where does it come from? The term was coined by Harvard political scientist Graham Allison in the mid-2010s. However, the logic is over 2,400 years old. It is named after the ancient Greek historian Thucydides, who chronicled the Peloponnesian War 431 to 404 BCE. Thucydides famously observed, "It was the rise of Athens and the fear that this instilled in Sparta that made war inevitable." The core concept is the trap isn't just about two countries disliking each other, it's about a structured stress caused by a shift in the balance of power. The rising power, as it grows stronger, it naturally wants more influence, a say in the rules, and more respect. The ruling power, the established leader, sees this growth as a threat to the status quo. It becomes fearful, defensive, and paranoid. Kind of sounds like Washington right now, full of fear, overtly vigilant, and completely paranoid. The flashpoint. When these two forces collide, even a small unrelated incident like a diplomatic snub or a minor border skirmish can spark a massive war that neither side originally intended. The subject matter here between US and China is Taiwan. The Harvard study data to prove this wasn't just a theory about Greeks in tunics. Graham Allison's team at the Belfer Center looked at the last 500 years of history, studied 16 cases, 12 of which resulted in war, 4 of which resulted in peace, a 75% hit rate. Examples of the trap: World War I, a rising Germany challenged the global supremacy of Great Britain. The Cold War success: the Soviet Union challenged the USA, but they managed to avoid a direct hot war, partly due to nuclear deterrence. I would like to point out that Russia just successfully tested a new type of missile called the Sarmat, which can basically hit anything on the planet. Why people talk about it today. In modern discourse, the Thucydides Trap is almost exclusively used to describe the relationship between the United States, the ruling power, and China, the rising power. China has been manufacturing things and building themselves up for decades, while we have been involved in many foreign entanglements, spending lots of money that we don't have and wasting precious time and resources on things other than our own country. China has actually done the opposite. They've taken all of that productive power and they've put it directly back into themselves. The trap suggests that unless both nations take extraordinary diplomatic measures to manage their fears, they are structurally navigated towards a conflict, even if both leaders say they want peace. Does knowing that 12 out of 16 historical situations that ended in war make you more pessimistic about modern diplomacy? Or do you think technology has changed the stakes too much for that math to hold? So this is a big deal. When Trump and Xi sit down to dinner and Xi brings up the Thucydides Trap, this is a very, very big deal. This is a message that President Xi is sending to Washington. So here's the full article right here. We have, of course, some, AI generated images here. These are wonderful. I use these myself. Excuse me. Oil prices are up significantly. The oil hit a high of 105. We're going to look at the chart here in a second. Bond yields are starting to go up. That means the bond price is going down. Yields are going up. Yields going up is not good for the stock market. Every time the yields start to go up, we start to go down. Equity markets sharply lower overnight. The Kospi down 6%. The Kospi is on a complete runaway parabolic blow off top. If you check out the Kospi, I don't have the chart here, but it is up an obnoxious amount in a very short amount of time. So it's blowing out to the upside and now it's reversing. 2.5% is the down mark for the NASDAQ. Levered ETF exposure and high concentration, clearly exacerbating the sell-off. It's been a complete mania for weeks. The NASDAQ's up 30% in about a month. It's the most powerful rally ever. The catalysts are intertwined with what appears to be a nothing burger in terms of outcomes from Trump's trip to China, exacerbated by Xi's not-so-hidden threat and Trump's comments on the Strait of Hormuz. The Strait of Hormuz remains closed. We are losing about 14 million barrels a day from the world's crude oil supply. We're going to hit 1 billion barrels pretty soon on the total damage done since the war began. We're longer than 7 weeks into this. That outpaces the Goldman model now by several days. Goldman had a target of 160. Their model is now blown. The reality is starting to show itself. It's starting to come back into the market. The market is not going to be able to ignore the severe degradation in the crude oil market for very much longer. This article says, stocks hit as yields energy firm on renewed fears of U.S.-Iran conflict resumption. News Squawk U.S. market open. Let's go back to the summary. And it says here, on the second one, the core theme is that the market sold off because fears returned that the Iran conflict could restart or escalate. Energy prices and treasury yields both moved higher together. This is a dangerous combination for stocks: higher inflation, higher borrowing costs, weaker growth outlook. What triggered the fear? Headline suggested ceasefire instability, renewed conflict risk, Trump losing patience with Iran, possible military escalation. The whole thing has now come full circle. Again, we've gone from peace deals and negotiations and everything is awesome and AI will solve all of our problems to reality. The reality is that the Strait of Hormuz remains closed. AI is not going to solve everything. And now the tensions in China are building up despite the diplomatic visit with Trump and all the big CEOs going to dinner with all of the Chinese government. So, what does this do to the actual price? Let's look at the price. of things at the moment. So we see that the market is definitely starting to trade lower. The market has not been able to trade lower since before April. So this move down is actually the biggest move down so far. The Nasdaq's off 500 from the high. That's still nothing because it's trading near 30,000. So a few percentage points may seem like a lot, but in the overall scheme of things, it's actually not that much. This is a modest correction by comparison. The ES finally gave up the 7,500 level. It's trading down to 74.45. We can see that gasoline is still below the 370 mark. It is still elevated. It's 5.29 a gallon here in the Midwest. So it is rather elevated, and it's going higher. In the crude oil, 103.72. The high is around 105. We can see that it is now at the second resistance point at 104.25. So the crude oil market went up. Let me move this here so that you can see. So the market basically steadily moved up higher all night long. The opening is near the low. We started to trade above the opening at 102. We got through the previous day's high at 102.50, and we ran for the first and second resistance. The high is 105. So the crude is trading higher. It's a matter of time before we make an attempt for 115. If we look at the NASDAQ here, we can see that the NASDAQ has basically been selling off all night. So the NASDAQ started the evening near the high at 29,700. After Asia opened, that's the little blue box here, we started to come off pretty substantially. And we have ended up down here at 29,208. We got through the previous day's low overnight at 29,450. That provided resistance. I would expect that that is going to be resistance today if we can get back up there. So trading back through the previous day's low here on the daily chart. So that means that the bull is losing control of the market. All the lows have been basically held more or less on the way up, and now all of a sudden the low is not holding. So I'm watching that very closely. Here is the S&P. The S&P is a similar story. It started out the session near the highs of the session. It has come off. It went through all of the support levels. We're starting to find some dip buyers here at the S2. So we're up at 74.52. We've got about 4 minutes until the open here. That is the picture of the stock market at the moment. So I will move this chart back to where it was. And if we look at gold, gold is a risk asset. Gold is trading lower as well. So the rally that had been holding the 20-period moving average here, I had thought that the gold was starting to stabilize in this area, and 45.20 was the support from before. We are now basically running and testing that support right here. So gold is back on the support at 45.20. If the 45.20s do not hold, we will definitely possibly explore some lower prices very fast. I wasn't expecting this to happen, and I'm sure other traders were not expecting this to happen either. So weekend risk is also a factor right now. So if tensions are going up, if the headlines that are coming out are full of fear again, then that is going to put pressure on these risk assets. And any escalation of war usually happens over the weekend when the market is closed, so that it doesn't have the dramatic impact initially on prices. So if people are scared that things are getting worse, they're going to start doing something before the market closes over the weekend, taking into account all of these themes that have been present since the war started. So if weekend risk fear continues, The market may simply continue to slide. The gold may continue to go down. The crude oil may continue to go up. So today's session is going to be very interesting. I normally do not pay too much attention to the market on Friday afternoon, but I will probably be paying more attention to the market here on Friday afternoon for that very reason, and because of the weekend risk that may come in here as we approach the close. Until the next episode, thank you for joining me. I appreciate you stopping by. Hopefully, I will have some more good material to put together over the weekend. Maybe I'll make some more HTML widgets with Claude. I will definitely be updating the Hormuz deficit clock and the new widget that I have, which is the systemic damage chart of the energy market impact to everything else. I covered that yesterday. If you want to check that video out, it's right here. And I will see you guys on the next one. Take care.